Good morning, everybody. Hey, welcome to Wednesday, the December 23rd. 2 days, and we've got Christmas here. I hope you're ready as we get ready. This is our last day in the office. Our office will be closed Thursday and Friday, so we can spend time with family. And I hope you're ready for this holiday season. Also, yesterday was a mixed bag. We'll talk about that. Today is going to be like a normal Thursday. We've got jobs, we've got personal income. There's a lot of economic numbers coming out today that Dave and I will talk about. But before we get started, I just want to wish everybody a Merry Christmas and a Happy New Year, and we will look forward to 2021 being a much better and brighter, healthier year than 2020. So hey, waiting for Dave, and he will be on momentarily.
It's 8:39. Now 21 before 9. One more chance for Christmas here. Check in and see what's going on with your money this morning with the expertise of a real pro. Phillip Statler from Statler Financial Services is on the line this morning. Phillip, how are you today?
Hey, I'm doing well, Dave. This is our last day in the office. Excited about that. We're going to take Thursday and Friday off, give our crew a time to spend with their family. And so we are excited. This is my last day with you this week.
Well, I was kind of telling you that I look forward to Christmas around here for all the traditional reasons. Plus, it's the one day all year in which we don't have a live morning show on the air on Christmas Day. So, frankly, I'm looking forward to the day off myself, but I will be here tomorrow to pinch hit. Looking at the indexes the way we closed yesterday, you and I were all starry-eyed optimists when we started out the day. It was one of those days that was Robin Hood in reverse. Dow ended up down 200 points. The S&P was down by about 7. NASDAQ managed to gain up 66, and both of us kind of noodling it through. All I could think of was running out of steam more than anything else. How about you?
Well, I think so, Dave. Let's face it. We've been bumping our noses up here against these highs now for quite a while, and we're heading in now to really the last few trading days of the year. So I feel like people are going to be looking at their portfolio, deciding whether they need to take some gains or some losses, and that's going to be really reflective, I think, in the market because the volume as a whole is probably going to be down between now and the end of the year.
We kind of surmised that yesterday. At some point in time over the next 24 hours, everybody's going to start heading for the free eggnog at the door and saying to heck with it all. Plus, as you say, 200 points down on the Dow yesterday, and we're still over 30,000. It's hard to call it a bad position to be in right now.
No, it really isn't. It makes you wonder, what's, after the first of the year, what's going to look like. And I thought it interesting yesterday, Dave, just a little news tidbit that Trump, you saw what Trump said, right? That he thought that this bill didn't give people enough money. And this is really the first time he's chimed in on anything when it came to this stimulus bill.
Yeah, he pretty much had gone to the point of, from his position on Twitter, because he hasn't been in public very much, saying pass something, didn't care what. This is the first time he actually had an opinion, but then again, he's not going to be responsible for trying to pay for it, so he can be as much of a Santa Claus as he wants to be right now, can't he?
That's right. Why not just go out with a flame, right?
Good. Regardless of what one thinks of President Trump's policies, it has not been the most graceful exit, so going out with a flame probably would be kind of sort of his style, wouldn't you think?
Yeah, I would give you that.
So, anyway, it was a loss. And the other thing with the balancing and the tax protection measures that you mentioned there, we also still mentioned that between Christmas and New Year's, going to be a lot of mutual funds rebalancing, and that's going to end up with some kind of warped numbers that we can't be surprised at seeing between now and then, can we?
Well, that's right. We're going to see everybody start to rebalance for the quarter heading into next week. And so what is that going to look like? We've been given kind of a heads up that because stocks have been on such a tear up, that there's going to have to be some selling to rebalance those balance funds, right? That expect a 60-40 split or a 50-50 split, whatever their prospectus says that they're supposed to adhere to. They have to go back and rebalance at the end of the quarter, meaning they're going to have to sell some winners and reallocate that to the things that haven't done so well.
That's a valid point. And when you mentioned that the other day, it prompted me to go back and look at my own retirement funds. And yeah, a couple of funds that I'm into do have 50-50 and 60-40 splits, and the equity side of those funds has kind of gotten out of whack. So I would expect to see a couple of my funds dumping a lot of money in order to make things balance out at the end of the year. So the report shows that 50-50 or 60-40.
That's right, and so we can expect that to happen. And if they haven't done it yet, some companies, some mutual fund companies may have been doing it a little here, a little there. I mean, a little for them is still a lot, but
Yeah.
next week, if they haven't got it done, I mean, that could affect our volatility next week.
Absolutely. And if we have some big changes this week, there might be some changes back as well. So, I mean, you don't know what's going to happen. You just can explain some wild swings as, one or two big funds end up going, whoopsie, got to change quick before the 31st. We start out the morning with a couple of macro reports out. Couple of them good, couple of them bad. Probably the heaviest ones, though, are the consumer behavior numbers because, well, we're into the Christmas season. Consumer spending last month fell by 0.4%. I didn't have an expectation on that, but personal incomes were down by 1.1%, and the market was only expecting 0.3% decline. I can't believe either one of those figures is going to make traders happy this morning.
No, it really isn't. And let's just put some context there. Personal spending was, like you said, down 0.4%. They did expect it to be down 0.2.
Okay.
But month over month, I mean, they were up 0.3 last month. So a pretty big swing there when it comes to personal spending. And like you said, personal income was a significant miss at minus 1.1%. It was expected to be minus 0.3%. And it's not too far off of last month, Dave. It was down 0.7% last month. So, yeah, that's kind of a little bit of a miss there.
Yeah. Do they put any flesh on the bones of those reports whatsoever? Is that the layoffs in California and New York messing with that number?
I don't know. I don't. The report I'm looking at this morning, there's really nothing around the report, just the numbers.
I'm kind of curious. I don't know. I've never seen the actual flesh and bones report. I get the headline news on that number and respond accordingly. I didn't know whether they were explaining it or not, but I got to believe when you see a big drop in personal income at a peak retail season of the year, you back it up with all the shutdowns in New York and California. I got to assume that at the very least contributes to it.
I would definitely think so. I mean, those states closing stuff back down again is not going to be good for spending.
Absolutely not. The other side of the fence was relatively good. Again, macroeconomic news. First-time unemployment claims out a day early this week because Christmas Eve, remember the president declared Christmas Eve a federal holiday, so the federal government will be on vacation tomorrow, just in time to refund their vacation pay, I gather. First-time claims, 803,000, which is not an optimal number, but when we were expecting 885, I'm calling that at the very least good news from a macro standpoint in the face of all the shutdowns.
Absolutely, that's better than expected, and better than I expected too. I mean, I'm thinking that with all the layoffs that we're hearing about and closures, I expected that number to probably be back up to 1 million.
Yeah, you and I both were figuring on that with all the headline top line items we were reading all month last month. I figured we were going to have nothing but bad news out of the unemployment front. Durable goods orders, another bit of good news down the line. Factories and companies ordering stuff that lasts grew by 0.9% last month. That, I gather, was better than the market expected, too.
It was, by about 0.3%. And folks have to understand that means that companies are placing orders for items to put into the inventory. And that's always a good sign. That means people are buying, even though our personal spending number was down. It's kind of a projection for the future, right? They're buying, they're placing orders now so that their inventory will be up next month.
And you always have to look at those numbers month by month, both the good news and the bad news ones. They're data points. You mentioned the consumer. The consumer income number is being way off, but it was pretty much on pace with what it was the month before. It's you got to look at data points and say 1 month it really looks warped. There's a lot of things that can go different between cup and lip. Don't you agree?
Well, that's true. Now, the other part of durable goods that you and I didn't talk about before was durable goods less transportation. Um, and that number was a slight miss. They expected that to be about a 0.5%. It came in at 0.4. So, um, transportation is a big part of that durable goods orders.
Which kind of indicates the car sales were a little slower than they expected, but other stuff that goes into manufacturing things was good. On balance, I think I'm going to call that a good macro sign.
Oh,
Although my
absolutely,
yeah,
absolutely. I think that's good news.
yeah, my car salesman friend aren't happy to see that, but at the same time, that's on balance for the macro economy, it's not bad. Resetting the table for the morning, off day yesterday on Wall Street, but Nasdaq got a gain out of it. That looks like a rebalancing effort to me. 45 minutes before we open this morning, Phillip, what do things look like so far today?
Not as good as yesterday's start of the day, but better than where we closed yesterday for sure. We've got the Dow up about 0.25%. The S&P 500 is up about 0.33%. Nasdaq's lagging behind everybody else. It's up a little over 0.1% this morning. If we look at the commodity side, we've got silver up 0.8%, gold up 0.25%. Crude oil is it's up from where it closed yesterday, Dave, by about 0.1%, but it's down about 50 cents a barrel from yesterday's time you and I spoke. It's at 47.07 a barrel right now.
Yeah, that's on the low end of the range from where the mornings have been starting out lately, and I'm not sure what the cause of that was because I didn't see any inventory reports come out yesterday. Did you?
No, I haven't seen anything like that.
Could be. Overseas markets, by and large, the Asian rim was not unhappy overnight. Their markets were up generally by over 0.33%. Europe is kind of mixed right now because we're coming up on crunch time for Brexit. British markets are off this morning. German markets are up measurably midway through their day. Phillip, we're getting toward the end of the year, one of the last times before the end of the year you and I are going to talk, and one of the last chances for folks to be able to get things balanced and get things ready for the end of their fiscal year. How do I find you to get things in order?
Dave, they can give us a call at 863-382-0037. They can check our website out, statlerfinancial.com. We've got a scheduled calendar link there to our calendar. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
All righty, my friend. I will wish you, your family, and your new grandchild a very Merry Christmas, and we'll talk to you on Monday. Fair enough?
Thanks, Dave. Y'all have a Merry Christmas. Enjoy your day off, Dave, and I will talk to you on Monday.
Thank you so much. Do appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. If you owe 20...
Hey, folks, as we sign off for this week, I want to take this time to wish you and your family a very, very Merry Christmas and let you know how much I appreciate you turning in every day and listening to the show. Have a great day. Have a Merry Christmas, and I will talk to you again on Monday.